Gold and silver have both kind of come off their highs. This is something I've been kind of looking for. Um, the rationale is simply this: there's a big run up because of the money supply and, of course, lower interest rates. But those days are done. So therefore, we should see these metals kind of slide a little bit lower. I've been stepping in, selling calls, not exactly buying puts. I'm not putting any risk reversals on because I think the move lower is going to be meandering and slow. But I still want to make money on this. One of the strategies I do this often, is I sell calls on SLV stock regularly. When I get the premium, once they expire worthless, I pull the money out and I buy the actual coin. Been doing that for a long time. I want to break down how higher interest rates, higher for longer, with a contracting money supply will affect GLD stock and SLV stock. Those are both two ETFs for gold and silver, respectively. Let's jump in. If you're just joining me for the first time, thanks so much. Make sure to hit the like and follow button down below. In this channel, Stock Market Analysis and Stock Options, I break down what's happening with the broader stock market. And I don't just look at some chart for one thing. I look at the entire economy and all the aspects of the broader market. Here we are looking at GLD stock. This is gold ETF. And I had been, last week I really started kind of going in a little heavier on selling some calls because I felt with interest rates moving as high as they were last week, of course, they backed off since then. I felt that gold and silver would start backing off from their recent highs. This has happened. My silver trade that I put on, and the SLV stock, that's another ETF on silver itself. I sell those calls all the time. I, from time to time, will get in on gold itself, GLD stock, selling calls, but mostly a lot of my activity is on silver. And I take the premium when those options expire worthless. I buy coins. I stack them up. I got a pretty decent little stack of coins, and I'm just going to keep doing it for a long time. I may start buying some more gold coins. I don't have a whole lot. They're a little more expensive. But the fundamentals are real simple. Interest rates, being as high as they are, will weigh on carrying costs for these metals. If you're sitting on a lot of this stuff, there are costs involved. And a lot of it's driven by the cost of interest rates. So it gets expensive to just be holding something that collects dust, basically. And so its value loses value. Here we're looking at SLV stock. Again, this is the one I'm really super active in. I get in on gold, GLD stock, that ETF often, but silver is the one I just hit as often as I can. And when the market was roughly around 2150 or so, I stepped in and I started selling 2350 calls. I didn't think that we were going to see any kind of movements upward. Silver's been really kind of just contained. We had some geopolitical concerns. This is what really pushed gold stock up higher and higher. But those geopolitical concerns are really kind of waning because simply it does not look as if the spillover would happen that they originally felt. And because of that, there is a lot of selling going on. Here, the 10-year Treasury yield. We are no longer in an environment when there is basically zero cost to borrow anything or carrying costs when you're specifically talking about gold or silver. Because of interest rates moving back up to basically normal levels from these abnormal levels, we have seen a big kind of shift lower with pricing. But there are two things I really want to kind of point out. First, the deficit. This is probably going to continue to keep pressure on the 10-year Treasury notes. We did get an auction today for 10-year Treasury notes, and it was well received. Actually, interest rates kind of moved lower on the 10-year note with all the supply that hit. That says that there's a lot of demand there. But when you look at the deficit, there's a lot of supply, plain and simple. But there's something else going on, the M2 money supply. This is something you really kind of have to keep in mind as well. What pushed gold up from where it was to nearly 2000? It coincided with when the Federal Reserve started printing as much money as they possibly could and buying as much as the U.S. Treasury debt as they could. This kept interest rates artificially low. The money supply expanded. Gold went higher in value. It's called inflation. Well, the Federal Reserve is working actively to reverse what they did. They are actively trying to shrink their balance, which would shrink M2 money supply. Interest rates are going to remain higher for longer, even if they do come down somewhat. This will get the money supply on a more trendline move. So it might take some time, but I feel as if the, say, GLD stock has probably seen its highs that it will see for some time because the forces that pushed it upward are no longer there. Here's a good look at, this is spot gold. And as you can see, going all the way, we saw some movement in 18 and 19 kind of upward. But then, of course, in March 2020, when COVID hit, everything pushed higher. Gold itself hasn't been able to really move much higher from there. And that's really kind of a big sort of thing to kind of keep in mind. Something that I'm kind of looking at and keeping an eye on a regular basis is that despite the fact that interest rates were as low as they were, despite the fact that the Federal Reserve was gobbling up as much debt from the U.S. federal government as they could, and despite the fact that the money supply expanded as much as it did, gold sort of stopped going any higher. So now that you remove those factors, there's really nothing that would push GLD stock or SLV stock higher. There's one more thing I want to look at. Here, of course, XME stock. This is the Spider Trust for mining, metals and mining. If interest rates remain higher for longer, this will really affect revenues and profits for the stocks to trade in the XME ETF stock. Because of that, I do see movements lower in XME stock itself. This is one I pay attention to on a regular basis. Again, because I deal in, because I take physical possession of silver as much as I do, I'm constantly asking the question, well, what's going on with the miners? What's going on with the miners? And here you can see XME is a great ETF if you want to trade the miners themselves. So instead of just the metal, you're looking at the companies that actually mine for it and, of course, other minerals as well. But I expect XME stock, the ETF, will begin to sort of slide much lower. We may see as low as, say, 26, 28, maybe 30 in that range over the course of, say, the next probably 15 months or so. Throughout 2024, I expect XME stock to kind of move much lower. Make sure you hit that like and follow button. Again, what I do is I look at the stock market analysis, and of course, stock options. I take a look at all the various industries themselves and the ETFs so you can trade off them. Hit that like and follow button. See you in the next video.